Stocks witnessed broad-based selling with declines outnumbering the number of advances. A sell-off in the US equities overnight following a weak manufacturing print and a sharp slide in Nvidia. Hurt sentiment, metals and IT lead the decline.
The Defense Acquisition Council has approved 10 acquisition proposals spanning combat vehicles, fast and offshore patrol vessels, aircraft and fire control radars worth 1.45 trillion rupees, with 99% being from domestic sources, providing a fillip to local suppliers.
The government has launched an offer for sale to divest up to 6.7% equity in GIC RE with a floor price at 395 rupees per share. The move is expected to net the government nearly around 4,700 crore rupees. The stock slips.
Crude slides on fears of slowing global growth and weak US summer demand, while metals dip following weak China economic data and a rise in inventories. Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Nigel D'Souza. Well, it's turning out to be a session where we are taking a breather after 14 consecutive sessions of gains. It seems as though the markets are now seeing some amount of profit booking, but it is important to note that we've recovered from the day's low. So we are 48 points up from the day's low for the Nifty at this point in time. The low point of the day for the Nifty was around 25,083. So we've recovered from those levels. Let's see whether there is a session where there is a further recovery for the markets, which is predominantly because of what happened with the global cues overnight. In fact, talking about the global cues, we do have the US August jobs report data, which is due on the 6th of September. So that'll be important to watch out for and also corroborate what the street is fearing when it comes to weak data for the US. A lot of stocks in focus. So we have defense stocks which are in focus, such as Mazagon, BEML, all of these stocks which are higher. And separately, a lot of these stocks which are either at yearly highs or fresh 52-week highs include stocks such as Piramal Pharma, Kim's and Kaplan Point. So it's an active market. We might be declining at this point in time in terms of the global cues, which we need to monitor, but stock-specific action always continues.
Well, that's right, Ekta. And it seems that the market wants to latch onto positives. Crude oil prices are lower, paint stocks are doing well. Asian Paints is higher, Berger Paints is higher in today's trading session. Lower crude prices means good news for OMCs. So you have HPCL, BPCL and IOC, all three of them are doing pretty well in today's trading session. And as I mentioned earlier today as well, for me, the Nifty bank, that holds key. It's defended that crucial mark which we laid out earlier today, 51,250. We almost went to that mark in the first 20 minutes of trade. We have bounced 150 points. Plays out weekly expiry. Yesterday it shows signs of coming back into form once it crossed that 50 DMA. And today as well has recovered 150 points. So that's a swing factor for today. But if you look at the screen and you say, well, we're down 140 points after seeing the US markets down 1.5% to around 2%. It's par for the course, and the bulls will take it after the kind of run that we are seeing. But Ekta, there are some flashes at the bottom of your screen with regard to the GST council meet that's scheduled. And some of the stocks, I think, have seen some kind of a movement. Zydus, case in point, has recovered a little bit. I don't know how much of an impact this news has, but a few of the stocks moving around.
Well, yes, it'll definitely be a relief if in case there is any kind of relief when it comes to cancer drugs, because, I think the entire Indian government is very well aware of the kind of burden that we have when it comes to cancer. So this would definitely be a positive. Trastuzumab, for example, can be cut to 5% from 12% when it comes to a GST amount. So that would definitely be a relief for patients and would be, would possibly be a pass-through to them. So that's definitely a positive which would come in. If it does affect the stock that much, I don't think so. It would more be of a patient standpoint relief as compared to, a change from the company standpoint.
Got it, Ekta. Thanks for that. Well, let's focus on our first management on the show. We have RailTel. That's the first management. Do know they have been granted the prestigious Navratna status by the Department of Public Enterprises. The company also bagged some orders in the recent past. So get an update in terms of how are things shaping up and how does this Navratna status change things for them. We have with us Mr. Sanjay Kumar, the CMD of the company. Hi, Mr. Kumar. Good day. Thanks a lot for joining in and congratulations on being conferred this Navratna status. Tell us, how does it change things for you with regard to either being a preferred vendor, either you're looking to raise some money, How does this change things for the company?
So thank you very much for your best wishes, and thank you for giving this opportunity. So actually Navratna status is always, it has been seen as a special category being accorded by the Government of India to its CPSEs, and we are fortunate enough to get this opportunity at this age, young age of 24 years we are completing this year. So when we talk of benefits, certainly many tenders where we are bidding, and there's a QCBS kind of evaluation system, so we might get advantage there. If we talk of investments, yes, investments limits certainly are improved. Now we can do some investments which are where, like data centers and all, where earlier we had to, I think, we had to approach Government of India for investments, and then similarly JVs. Now we can form JVs for business opportunities, not only in India, even abroad. Recently, we have started exploring markets in international business also, like South Africa, African countries and Caribbean countries. So there also is going to benefit us, because sometimes when some project is awarded to us, of course, we may require to open offices also abroad. So this is certainly going to be a real good opportunity for us. And at the same time, there's a challenge. And RailTel is certainly, our team is completely ready to take this challenge and to perform not only in the domestic market, but we are ready to launch shortly, sometimes when we get some opportunity from abroad also.
Okay, Mr. Kumar, congratulations on the status. You did mention that you would probably see some amount of preference when it comes to tenders. Can you tell us, what are the tenders that you're currently participating in? What is the kind of competition that you see? And hence the advantage that you could probably see now potentially because of the Navratna status?
So rightly, I'm not very much aware specifically about this, but yes, we are participating in a very big tender of Government of India, which is for Kavach in Loco, and which is due on 19th of September. And we are prepared. We are preparing for the same tender. And Kavach tenders, many other tenders are also coming. We are preparing the most awaited tenders, which even media was also asking many times in previous interactions. So these are the important tenders for us now. LTE tender, which was floated some time back, is for now has been put on hold by Government of India, Ministry of Railways, maybe because they are giving priority to Kavach tenders finalization first. So I think, but Navratna per se, since we're not eligible earlier, we were not looking for such tenders earlier, but certainly now we will be focusing on such tenders also in the future.
All right, Mr. Kumar, so the Kavach tender, if I got that correct, it opens on 19th of September.
Yeah.
And when do we get your results of this Kavach tender?
See, that is not in my hand, of course. That is Ministry of Railways.
You know, the reason, Mr. Kumar, I'm asking you this because I want to know when is our next date. Because we know it's opening on the 19th. Then we'll have to have you back on CNBC-TV18 and detail those tenders for us, right? So by when should we be fixing up that interaction?
That interaction, I can't tell that date right now, because that tender has been decided by Ministry of Railway, not by
Got
us.
it.
They will take their due diligence time, whatever they want to, because
all right. So
these are very complex and it takes time. Yeah.
When will you hear about the outcome? But there's no, should we expect it in a week, a month, a couple of weeks? Give us a broad timeline, at least post the 19th.
It should take about a couple of months.
Couple of months, okay.
What is the size, Mr. Kumar, of the tender, and how much would you be bidding for?
This size of this tender is around 7,000 plus crores. And I really, because we are vouching for this tender for the first time, and our partner is also newly approved by RDSO. So I can't really comment upon the size of the order we get, but the total size of the tender is 7,000 plus crores.
Okay, so you're bidding with...
Yes. This is for
You're
10,000.
bidding with Quadrant Future Tech, and you'll be bidding for, say, this entire 7,000 crore bid. Is that fair to assume?
I may not like to open my partners this thing, but yes, Quadrant is our partner. But right now, I would not like to share this information because of some this being a sensitive information.
Okay.
Competition is already there.
Fair enough.
So I won't say anything. Yeah.
Fair enough. Your order book as of Q1 was 4,800 crores. What does that move to at this point?
So right now we are around 4,900 crore as of now, as on date. Yeah.
Got it. All right. Let's focus then about the year and now. Plenty of triggers, getting the Navratna status, Kavach orders as well. So we'll wait by for that. But, what's the outlook for the year? Earlier, I think you were talking about 25 to 30% growth, and that would take you to a number of roughly around 3,300 crores or thereabouts. Do you think that's on for this year? And what kind of a margin outlook should we be looking at?
Yeah, that's on. Whatever we were envisaging earlier, so we maintain that growth guidance as well as EBITDA margin guidance.
Okay, what would the EBITDA margins be, sir? So revenues, we're working with around 3,300 crores, as you're confirming to us. So we'll work with that. And margins should be in high teens. First quarter, you did close to around 18% margins. Earlier, you have been in that vicinity of around 15 to 19%. So what's the band?
17 to 18%.
17 to 18%.
Okay. Sir, you've previously said that you're exploring opportunities in telecom, railway, opportunities in terms of business in South Africa as well. Can you just tell us where things stand?
So see, we have just begun about this international market. So we are there in South Africa and neighboring countries, and some other East African countries also. Even Caribbean countries also, we have touch-based recently. And we are also continuously in touch with MEA also. So opportunities, I just can't comment right now, but yes, we have made a beginning. And by the end of this year, I should be able to make some numbers, based on our successes in these areas, in these part of the country.
I just had one quick question for the near term. I know you've spoken, about your guidance in FY25, but in Q1, there was a 33% fall in sequential revenue. But are you seeing a recovery on a Q-on-Q basis when it comes to, say, your sales in Q2 as compared to Q1?
Certainly, if you see Q-on-Q, yes, you will see, because see, there was parliamentary elections also, so there was a slow progress of projects and all those things. But if you see year on year, we have made progress, and right now Q-on-Q also we will see. But I think H2 is going to be the main champion if I compare H1 and H2. So we are expecting H2 is going to be real. Though we have made much improvement earlier years, if you see our results, H1 was very weak whenever you compare with H2. But this year, because of, I think, elections, so we will be slightly behind, but still we are continuously focusing that all the four quarters are evened out. So we will continue to make these efforts that the quarters, see, our numbers are very small, so quarterly comparison sometimes becomes very difficult, but year-on-year progress, I'm sure there should not be any challenge.
And just to clarify, Mr. Kumar, the Kavach orders, that revenue recognition will happen for FY26. So FY25 numbers doesn't include any, anything from Kavach, right?
See, it depends. The numbers, I can't tell
you know why I ask you, Mr. Kumar, because I want to know whether there's an upside. This 3,300 crores you're guiding for, does it factor in something of Kavach?
We are really not factoring now, but it all depends upon the delivery, and then because certainly now if these orders are finalized, maybe another 2-3 months, and then it will take some manufacturing time and deployment. So maybe by the end of the quarter, but I'm sure that next year, if we get the orders, certainly they will make impact on our revenues.
Okay, all right. So it was a pleasure speaking with you. Thank you very much for joining in and being so candid about your business as well. Thanks very much and congratulations again on the Navratna status. Well, that is RailTel. They're sticking to their FY25 guidance of around 3,200 odd crores and margins of 17 to 18%. But the big trigger would be at the end of September, which is September 19th, where the Kavach bidding or the tender would open, and that's worth around 7,000 odd crores. They would be bidding for it with their partner. Well, we need to take a short break. We'll get you more on the markets once we're back. Stay tuned.
Welcome back. Well, a few stocks have come off the low point of the day. Biocon has moved into the green in a matter of 15 minutes or so. I recall it was in the red. Alchem has moved to the high point of the day, so that one as well should come up for you on the screen. Good move on both these two names. But even steel stocks, they have come off the lows of the day after the Ministry of Heavy Industries, speaking at an event today, addressed the industry concerns on Chinese steel imports and also pledged to push for higher tariffs on steel imports coming in from China to protect India's market. Let's hear out what he had to say. The stocks are still in the red, but they've come off the low point of the day.
I can understand. I will promise you that the problem which you are facing from the China, for that actually I try to convince our Prime Minister and Finance Ministry to look after about the from 7.5% tax to 10 to 12% your demand is there. For that, definitely I will going to try to convince and to bail out the present problem which our steel industry facing in India. For that, actually, I will be with you. I am very grateful to you for your achievement and the contribution given to the country from your industry. I urge all of you to bring your minds and expertise together so that as one united Indian steel industry, we can forge a path forward.
Okay, so that is some comments coming in on the steel space, but let's focus on a huge IPO that the street is watching out for. Bajaj Housing Finance's 6,560 crore IPO will open for subscription on the 9th of September. The issue will consist of around 3,000 crores of an offer for sale and a fresh issue of around 3,560 odd crores. Reema Tendulkar caught up with the management of the company, asked them about the regulatory requirements from the company and growth prospects going forward. Listen in.
Clearly, the RBI requirement, given our size and being in the upper layer, was to list before September 2025. But what's equally important is that while Bajaj Housing Finance is only a 7-year-old company, as you mentioned, assets as of 31st March 24 at 91,000 crore, the fastest growing housing finance company, the largest non-deposit taking housing finance company. So it becomes important to diversify our sources of borrowing as well. Our capital has all come from the parent, that is Bajaj Finance, the last 7 years. So it's a combination of size and the RBI requirement, both I would say. But we think for the next couple of years, this should suffice. And as you know, we have the requirement to dilute 25% over the next 3 years. And depending on how growth is going in the coming years, we'll take that call between primary and OFS.
If you look at a housing market itself, let us say home loan market, which is the largest part of a mortgage market, the market by plus some estimates plus minus was 30 lakh crore plus as of EGM in the country. Loan against property 10 lakh crore plus. So the kind of a market size which is there, compared to that, our size, relative size of a 91,000, 97,000 crore as of a 30 June still remains small. So we have an opportunity to grow, but we are not guided by a particular number. Subject to opportunity, market opportunity, and our ability to take space to the extent what we can take. Happy to get the outcome. More important and relevant part is, the market being very large is one part. This is also growing at various estimates on the industry at a 13 to 14% kind of a CAGR, which is a very high pace of a growth.
Well, interesting comments coming in there. The steel minister is saying that we're looking to put in some tariffs to protect the industry, and maybe you could take those tariffs up to around 10 to around 12%. We have a comment coming in from Mr. Naveen Jindal. He's saying that duty on imports, this 10 to 12% will not be enough to, fix the problem. So let's see whether or not they get that 10 to 12%. But Mr. Jindal has already batted maybe for a higher tariff. So we'll have to see how that goes. For the time being, at least the stocks have cut those losses. Let's slip in a short break. You come back, we'll continue our focus on markets. In fact, we'll get you a technical check on our markets. Don't go anywhere. Welcome back. Well, the markets are down close to around 150 points or thereabouts, but we're not breaking the lower end of the range, which is good news. Now, just pull up a couple of strikes. We have the 25,200 call that's seeing a fair bit of addition. The bears are getting confident that maybe, in fact, we may not get past that 25,300, 25,350 odd mark. So that's why they're writing that strike aggressively. And take a look at the premium out there. Earlier today, it was roughly around 130 rupees. It's come down to around 40 rupees. So that's the kind of slide that we're seeing out there. Pull up the 25,100 call as well. That one as well has seen a fair bit of addition, both of them adding more than 50 lakh shares, telling you that the bears, they're getting a little bit confident, which could actually, be a double-edged sword. If it's not successful, then they could get stuck on the wrong side. On the flip side, you pull up the 25,100 put. Out there, we're seeing a mix of activity out there. There are signs of some writing. There is signs of also some, some buying at those levels. So those that believe that markets are going to go down from here, they're buying that particular strike. But I think the smarter, the stronger hands could be writing that strike. And they are playing for that 25,050 odd mark holding out. Going by the writing, going by the action. So that's why the lower end of the range, the 25,000 level becomes very, very important. 25,000, 25,050. These contracts will expire tomorrow. So just keep that in mind. And the Nifty Bank is moving back towards that 50 DMA. So that could be the swing factor for the remainder of today's trading session. Already up 180 points from the day's low. Let's get in Pritesh Mehta. Pritesh, well, we're down, but not out. You'll have to say that. Going by what Asian markets are doing, going by the overnight handover, not too bad. What's your trade?
I agree with you, Nigel, completely. Prior to today's session, we have had 14 days of either a flat or a positive close. So one day's downtick does not change the overall scenario. In fact, I'm more concerned, or I'm actively looking at the breadth of the market. When I say breadth, a number of stocks trading at a 1 week high or 1 month high. That is not even changing. I've not even seen addition of stocks marking new fresh lows on weekly basis. So I think market is pretty much in a range. 25,000 on the downside, 25,500 on the upside. And this is the range market is going to trade into. But I think declines should be an opportunity to buy rather than we should not be talking about correction as of now.
Okay, all right, Pritesh. And what about stocks?
So, we have seen a trend coming in that financial service index is doing well. It is outperforming Nifty, it is outperforming IT index also. So I think this space is going to do well. Within the financial space, we like M&M Fin. So in fact, at least from the short-term perspective, the stock has given a good break on the upside. We have seen a series of bullish turtle breakouts, and now stock is moving higher. We can see a target of 365. The downside support is kept around 308. Second stock that we like is ITC. ITC is a good stock to be in when the markets are uncertain or not providing any decisive move. ITC, in fact, for last 1 month, stock has been consolidating. Now it is a confirmed ABC break on the upside. So I'm expecting a move towards 550. The stock would be around 494.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the word coming in on the technicals of the market. Well, for the Nifty, a bit subdued as of now. The Sensex down around 400 odd points, and the Bank Nifty, which is under pressure, down around 0.5%. We'll do one thing. We'll take a short break, but up next, we'll be connecting with Nilesh Shah of Kotak Mahindra AMC and Deepak Shenoy of Capital Mind as they join in to discuss as the Union government has initiated preliminary discussions with the Reserve Bank of India and SEBI for amending rules to allow the creation of a sovereign wealth fund. Stay tuned. Welcome back. Well, the markets are weak, but let's concentrate on what could be a potential important development for the Indian government and India as a whole. The Union government has initiated preliminary discussions with the Reserve Bank of India and SEBI for amending rules to allow the creation of a sovereign wealth fund. Sources say a $5 billion fund can create $10 billion worth investment opportunities every year. To talk more about this, we have Nilesh Shah, MD of Kotak Mahindra AMC, and Deepak Shenoy, founder of Capital Mind, joining in as well. Nilesh as well as Deepak, welcome to the show. Well, Nilesh, we're going to start with you. It's in the works now. It's something which is possibly being considered. But are you a proponent of it? Do you think that India should have its own sovereign wealth fund? And what can it bring to the table?
Undoubtedly, yes. Time has come for India to establish a sovereign wealth fund. Obviously, it has to be done in a calibrated manner. We don't have earned FX reserve as we still run current account deficit. But notwithstanding that, we can do it in a measured manner. There are many examples of successful sovereign funds. On the Far East, there is GIC Temasek. In the Middle East, from Adia Adik to many other institutions. And in the Scandinavian countries, there are Norges and others. So we have many examples to learn from. In some of these institutions, people of Indian origin also works. And hence, we should be able to learn from the best in the world to manage our surpluses in a better manner. Undoubtedly, we have to do it in a calibrated manner and on the good work done by our managers till now.
Right. Good to hear your thoughts, Nilesh. Sovereign wealth fund is a good idea, but needs to be done in a calibrated manner. Deepak, welcome to the show and thanks a lot for joining in. Well, you believe it's not such a great idea? Give us your rationale.
So my apologies for having a different opinion here, but I think it is better that the government does not do this. It should not be sovereign. There are many reasons for that, Nigel. I think one of the problems that I see is that India has a relatively high cost of borrowing, and interest payments are more than 7 lakh crores per year currently, of which is nearly double our next biggest payment, which is for defense, right? So defense is about 3.5 lakh crores or a little more than that. And interest payments are 7 lakh crores. Sovereign wealth fund would essentially be, when the government does it, it will be through borrowing because of the cash accounting system that the government follows. It will have to borrow money and then invest that money abroad. And that borrowed money can be used to buy, say, dollars, and then those dollars can be used to invest abroad if you're planning to invest outside of India, which is what most sovereign wealth funds do. India already has a process where the government sets up grants and investing opportunities for startups and businesses inside India. That comes through SIDBI and a bunch of other institutions. So a sovereign wealth fund would largely be thinking of investing outside India, and I think that's not a good idea for the government to do. It is better perhaps to allow mutual funds, like Nilesh Bhai is running a very successful fund, and I think that those funds can actually use retail money to invest abroad in a controlled framework. They have been restricted by RBI to only $7 billion. That limit can be increased, and then we can actually have Indian wealth being used to invest abroad. It's just not that it's sovereign. It is not the government's wealth. It is people's wealth. People are putting their own money to it. Also, that doing such a thing would widen the fiscal deficit because of the structure of such borrowing, and then that would therefore increase the interest that the government will pay on future borrowing, and then that increases interest payments rather than reduce them. It would actually perhaps even be better to float India's currency completely, allow foreign holders to continue to hold the rupees and even perhaps use them in a floating format, which is what most developed countries allow their currencies to be floated. We don't allow it yet. We have a relatively controlled capital account convertibility. So I think doing that will actually allow our currency to be used perhaps tomorrow in bilateral trade and perhaps in trade across the world as well, which would actually get us more return for our investments, and we don't have to then convert to dollars and invest in dollars. We could perhaps invest in rupees outside India as well. Both the government could, but also the public in India can. I think that would be a better approach. I would say a sovereign wealth fund in the form of, say, Norway or ADIA or even Singapore, they rest on the back of relatively strong fiscal surpluses. So therefore, those companies don't have big fiscal deficit to deal with, which is why they are able to afford having a large, foreign investment fund run by the government. I think in India, because the situation is the opposite, while we may turn a current account surplus, our fiscal, I don't think will support it.
All right. Nilesh, would you like to come in on that? Because, Deepak has brought up legitimate points about the cost of borrowing, the high defense expenditure that we have, as well as the possibility that this could probably even widen the fiscal deficit. Do you think that India, on a macro standpoint, is ready to have a sovereign wealth fund?
So Deepak has raised some interesting point. And obviously, there can't be one right view or one wrong view. We are all living in a relative world. So when GIC and Temasek were established, were Singapore in a fiscally very sound position? Probably answer is no. But they nurtured companies like Singapore Airlines, like Singtel, like DBS Bank over a period of time. Today, Government of India is owning about 47 lakh crore worth of PSUs. There is also a substantial portion in unlisted. Today, it is managed under DIPAM and other ministries. Can we float a sovereign wealth fund which manages this PSUs in a better manner on the lines of GIC and Temasek? So one day we'll have our own DBS Bank, Singtel, and Singapore Airlines from India. The second thing is, again, taking the same spirit forward, that since we are not fiscally surplus, we should not borrow money to invest. That's a very valid point. But today, we are taking money from foreign institutional investors, foreign direct investors, whose expectation of return from India is double-digit plus. And we are investing that money in US Treasury in low single-digit or at some point of time before at zero interest rates. We were running the most negative carry. Now, we are today one of the few countries where the net FX reserve is more than net FX debt. I'm taking NRI deposits out of FX debt as it mostly gets rolled over. So there is room available. And again, as I mentioned, we have to do it in a calibrated manner. If I put it in a very simple manner, till now we have played like our cricket team of the 60s, 70s, 80s. Our aim was to first draw the match, and then if there was an opportunity to go for a win. Today, Indian cricket team aims for a win, and if it fails, then probably aims for a draw. Our regulators have done a great job in ensuring that our macro fundamentals reach to current level, that conservatism has worked very well for us, and it is time for experimentation on a small amount in a calibrated manner so that we can generate better return on our investment. Obviously, all the good things which we have done in terms of fiscal consolidation, in terms of lower current account deficit, that we don't have to give away.
Okay, fair enough. But Nilesh, just before we wrap up this conversation then, what do you think would be a comfortable size to start the sovereign wealth fund with? And what kind of investments do you think one should probably envisage if and when it happens?
So these are all, question of lot of details. I don't have access to all the data to give any suggestion on the same. But what Deepak Bhai mentioned, that this is a specialized subject and we should recruit professionals like GIC, Temasek, ADIA recruits professionals, pays them well to manage money in a professional manner. There will be ups and downs. If you invest in low risk, low return assets, volatility will be low. But if you go and invest in high risk, high return assets, volatility will be higher. We can't become like Swiss National Bank, which incurred a loss of more than $50 billion because they were invested into stocks like Apple and others. That's not our goal. But we have to take one gradual step in a very, very calibrated manner where we can go from lower risk and lower return to slightly higher risk and slightly higher return. And that job should be left to the professionals.
All right, Deepak, as well as Nilesh, thank you very much for joining in and sharing your thoughts at this juncture when it comes to the consideration of the government when it comes to sovereign wealth funds. I'm sure this conversation will continue as and when more details come up. Thank you very much for joining in and speaking with us. Well, we'll take a short break on that note, but a lot more on the markets and stocks once we're back. Stay tuned. Welcome back. Well, for the markets, it's a bit weak at this point in time. We have Wipro, which is down around 3% odd. So that stock, along with other IT stocks such as LTI, Mindtree, is down around 2% odd, along with Infosys, which is under pressure as well. Separately, just want to point out that, stocks such as ONGC, Coal India, Hindalco, a lot of these frontline counters are seeing profit booking at this point. Remember that a lot of these counters are sitting on very good profits on a year-to-date basis. ONGC, for example, is up 50% year-to-date. Coal India is up over 30% year-to-date. On the upside, just watch out for a couple of these FMCG defensives. So Asian Paints is up around 2.8%. We have HUL, which is up around 1% at this point, and a couple of these cement stocks which are doing well. So Grasim, Shree Cement, Ultratech Cement, all of them seeing some amount of upside. Well, for the Nifty, we've recovered from those days lows. So it's still down around 0.5% at this point in time. The Bank Nifty also a bit pressured at this point. The advance decline ratio favoring the declines as compared to the advances. We'll take a short break, but be back with our commodity segment. Manisha Gupta will join in. She has with her S&P Global Platts. Stay tuned.
Welcome back, and joining us now is Mr. Kang Wu, Head of Global Demand and Asia Analytics, S&P Global Platts. Kang, hi, thank you so much for joining us. And what a market it has been overnight, with nearly 5% of a decline coming in for the crude oil prices. How do you read the price movement and, of course, the fundamentals behind it?
Thank you very much for having me. Yeah, indeed, oil prices yesterday and recently have been affected by a combination of the news of the OPEC Plus continue to hold their line that they are going to reduce the voluntary production cut, which means they are going to start increasing their production as early as next month. So that news coupled with demand kind of weakness, right? The demand growth. There is a lack of strong growth in China and some other countries. But I will say that fundamentally, this is August and then September, right? Fundamentally, we are globally, the oil demand is at about the highest level. So there is a lot of demand there, although we are heading towards a lower growth, right, starting from this month. But market sentiment pushed the price even further down. While when we continue towards the end of the year, even fundamentals will suggest that there will be a softness of the market. So we are moving towards a market that will become softer towards the end of the year and definitely in 2025.
Kang, since there are demand concerns right now, so what is your sense? Is all of this concern factored into the prices, or are you looking at prices reaching almost $70 for the Brent now?
Yeah, currently dated Brent, right? If we talk about the cash price, yeah, it's lingering around $75, $76. That is fundamentally is kind of lower than we thought. So the market fundamentals today support a little bit higher price, but you will say that this is the time that there is a market sentiment works in the opposite direction rather than the bullish side. It's the bearish side. Demand is just slightly weaker. We are still see 1.5 million barrels per day demand growth for the whole year. China, just like maybe a few months ago, people feel that the growth is 500,000 barrels per day. Now it's down to like 400 or slightly below, like 350 to 400,000 barrels per day. That's about the what we call weakness we see. It's pushing down the global demand growth a little bit. It doesn't mean that demand growth will be negative, right? For that matter, for the whole world,
sure.
It's still positive. Even for 2025, we're going to see over 1 million, even 1.2 million barrels per day of demand growth. It just the supply is plenty. There is a plenty supply, and plus overall the stock market sell off, right? The volatility of the stock market that influence the Brent prices as well.
Kang, if I can push you for the price sense here, so would you expect a slight down like this, or do you think we are now factored in all of what could go really wrong in sense of supplies, whether it was Libya output coming back, OPEC output coming back as well, weak China demand, strength in US dollar? Have we factored in, priced in all of that, or you think there is further decline coming?
In terms of possibilities, there definitely is a more downside on the possibilities. Okay. We could even see $50, $60 only on the condition that OPEC Plus push through their 2.5 million barrels per day of cumulative production increase by the end of next year. We don't see that happen. We don't see that in our base case. We think they're going to do probably half of that. So we may go even on average next year, maybe $75, $77 on average. But definitely, if that surplus production comes to the market, prices could go down below that.
Kang, what's your sense for the Asian demand going forward? I mean, China being on the weaker side, but Japan seems to be doing well, especially Indian market demand. How are you looking at as we get into 2025? Yeah,
so for 2025, Asia is still if we look at 1.2 million barrels per day for the whole world, Asia contribute about 800, 900. China is still positive next year. It's another 350 around, 350 maybe towards 400. So China is still the biggest volumetric sort of contributor. India is very solid. India is around 200, 250. So that kind of a range will continue. China is fastly coming down, right? If you talk about 2026, 27, China will come down even further, while India stay there at this kind of a growth, like 150 to 250,000 barrels a day of growth for many more years. We are eventually will reach the plateau of the oil demand down the road, not next year, not probably anytime soon, but eventually we'll get there.
Kang Wu, thank you so much for joining us. Well, that's the sense coming in from S&P Global Platts that they are anticipating crude oil prices to further decline from here. Well, Chinese demand is a bit of a concern, but the Indian and the rest of the Asia perhaps could do better. It also is going to be about the average prices next year, anticipated anywhere between 75 to 77, so much lower than from where we started in this year itself. But with that, that's all the time I have here on the show. Coming back, Business Lunch will take all the action forward.